Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there in age, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back, knowing that it's...
I do foresee a lot more properties coming on the market next month, and it is going to be a shocker for a lot of homeowners and a lot of real estate professionals. Honestly, I really believe that there's going to be a horde of properties hitting the market because people will not be able to afford the not the mortgage rates per se, because they're already locked into their interest rates, but they're not going to be able to afford the homeowners insurance that is on the rise because of these home prices that have gone up so much. And in Ohio specifically, the property taxes have shot up tremendously, and because of that, I'm seeing between the two of my houses about $600 to $700 in increased payments that I didn't have to make before. And so that is insane to me. I mean, absolutely mind-blowing that in 2 years, right, between two houses again, the price that I must pay monthly has increased by $700 just with homeowners insurance and property taxes. So that doesn't affect me too much because I've also increased my passive income and increased my active income. But for the average person, it is definitely going to weigh on them. It is definitely going to be something to really nibble at their finances. And obviously most people don't own two homes. Most people own one. About 66% of Americans own one primary residence. So what we'll see there is all of those people who bought HELOCs, all of those people who bought secondary mortgages, all of those people who just financed a vehicle and interest rates still have not gone down yet. What's going to happen is tapping into that savings once again, tapping into that credit card debt once again, tapping into your credit cards once again, taking out loans once again just to sustain yourself, right? Or a lot more garage sales. It's summertime, people. It's summertime. We're outside. I'm outside with you. And listen, there's going to be a lot more garage sales, a lot more people trying to get rid of things, right? But we also have people wisening up. I'm happy to say that one of my friends who is very materialistic is now buying things within their means. I'm not going to say whether it's a he or a she, but buying things within their means. So they just called me recently and was like, hey, I just got this new car. I was like, oh, okay. Only financed about $3,000. And I say only because we all know someone who will finance $20, $30, $40, even $50,000, $60,000, maybe even $70,000 in financing on a vehicle. I mean, for me, $70,000 is a great down payment on another property. So, I mean, listen, if you're willing to invest that into a car that's going to depreciate in value, that is beyond me. So with that being said, all I can say is I'm super proud to see that it was only $3,000 because, listen, even if they hold on to that mortgage payment for a whole year, by the time their tax season comes around, they should be able to pay it off had they been paying off their interest and payments in a timely manner. And that way, instead of just going out on a frenzy, maybe I can consult them right before they file those taxes and let them know, hey, if you invest this in paying off the vehicle, you will have a paid off car, and then you can do a little bit more with your money. They might take my advice, and that would be great. So with that being said, properties are going to be hit hard. They're going to hit the market. They're going to flood the market. And I don't think the prices are going to go down in May or June. But by July, when summer is starting to wane down, July and August, there's going to be a frenzy. I might be buying come July and August, and I do actually expect rates to stay about the same. I do not expect rates to go down. I expect people to be in pain. I expect true inflation effects to now be hitting. If it wasn't hitting before, because honestly it hadn't really affected me too much. All I saw was the Wagyu steak was about $45 just for one steak now, and that really hurt my heart. I was like, whew, I'm gonna buy a different brand of steak. I'm not buying Wagyu steak for $45 when I used to get it for like 30 maybe or 25. I can't even remember the regular price anymore. But Wagyu steak was the best steak for me. And for all those who don't know what Wagyu steak is, it's a Japanese steak that, I mean, it tastes unbelievable. I used to do like home dinner dates with Wagyu steak. But now I just get like the regular steaks and stuff like that because I'd rather get like 2, 3, 4 steaks for like $30 than a Wagyu steak for like $45. Like, to me, that's really unrealistic. So with that being said, that's the only place that I really saw inflation in my life until the property taxes and the homeowners insurance started to creep up. So again, for me, that's not really an issue. I'm considering paying less on the principal of the properties because I was paying about an extra $1,200 a month on principal, people. Just to be completely transparent with you, I was paying about an extra $1,200 a month on principal. But I might drop that down to about maybe like $800, maybe like $600, just to put a little bit of cushion so I can do other things, you know. Well, I don't even know what those other things are right now, but you know, things might come up to where I want to invest in something else, or I want more money on the side now because I expect other people to be having some hardship. Now, it's not that I want people to have hardship for all of those who are watching. It's just that you have to understand that money is opportunity, and the more you have, the more money you can make. And so that's what I always say is money is opportunity. If you watch my last video, I was just talking about the most important thing that I can say is money is opportunity. The reason for that is the more money you have, you can then go ahead and invest it in whatever you so choose, right? If I didn't have cash, I couldn't have afforded what I can afford right now. I couldn't have bought the properties for the price that I bought it right now. I couldn't have been able to do what I'm doing right now. And so I'm super, super grateful for the ability to save money first and foremost, budget correctly, not being any miscellaneous debt like student loans, credit cards, and everything else like car loans, things like that. And so I could focus on properties earning me money. And so that was really big for me. So again, I still have to create my budget. The same thing I tell everybody else to do, I have to do for myself, right? I have to create a new budget. I have to look at the expenses for what they are and how much am I actually bringing in. And then I have to tell myself, okay, what is the strategy moving forward? How much am I allocating towards X, Y, and Z? How much am I allocating towards X, Y, and Z? I'm actually going to do this budget today because I've been holding off on it for way too long. And if I'm going to preach it, I have to do it myself, right? I have to do what I preach. Say what I'm going to say to you and then implement it in my own life. Just because you have a lot of money doesn't mean you don't budget, right? Like, a lot of people are going to be under my comments saying, how are you financially free if you can't put $1,200 on your principal? That's like somebody else's rent payment, to be honest with you, that I'm throwing on the principal of my house. So, I mean, I'm not scared to be transparent. I'm not scared to tell you how I'm living. I'm living real good. I could finance any car I want. I can do whatever the hell I want. But instead, I decide to pay down debts because I just don't like being in debt to anything. And obviously, I don't want to use all my cash because money is opportunity, and I'm waiting for that opportunity to buy something else, buy something more, and then pay down that debt as well. And then for all of those who are saying, why are you paying off debt if you're trying to get into more debt? That is a great question, and so I'm glad 9 minutes in, we're finally answering that as well. Well, the reason why I get into more debt is because I am young. I'm 26 years old, turning 27, and it would be a lack of opportunity for me to not purchase more property, increase my net worth, increase its value. I'm not buying in bad areas. I'm not buying in bad locations. I'm not buying properties that aren't going to cash flow for me. I mean, I was just looking at a property that's now on a listing to rent for $2,700 to $2,800 a month, and I was about to buy that property, but I just didn't like the layout of certain things. It was only a 3-bedroom house for real. It had big ceilings, but the living room wasn't as big as I would like it to be. It really didn't have a living room. If it did have a living room, I probably would have bought it. If it had like a big living room, I would have definitely bought it. And so, you know, it didn't meet the needs that I wanted, that I thought would be nice for my future family. It had a nice basement, finished basement, all these things, but it didn't meet all my needs. But do I think it can rent for $2,700? I would like to see that. I would definitely like to see that. And if it does rent for $2,700, $2,800, then I know the price in this area is going up, because it's fairly really close to where I'm currently living. And I actually haven't checked what the rents are in my market right now. I've only checked for my other property because I rent that one out, obviously, and the lease is about to come up for renewal. But back when I bought this house, just as a little side story, I had an Indian couple. I don't know why I told you the race, but it was an Indian couple. They came in here to my house when I was looking for a roommate, because I house hack. House hack is when you allow other people to live in your property, which will offset the mortgage and allow you to achieve financial freedom a lot faster. That's exactly what I do. That's why I've been able to save so much more money. That's why I've been able to do so much more things, able to invest more. And that's why I invest about $15,000 to $20,000 a year in the stock market, and then still save about $20,000 to $30,000 a year in my savings, and then still invest in real estate and other endeavors as well. Not everything is in the stock market. Some things are in treasuries, X, Y, and Z. We're not going to get into all of my finances on this video, but house hacking was a great strategy for me. It was something that I was against. I do have to give credit to my uncle, who was telling me to get a roommate, and I finally did. You know, it's been working out. I do still have a long-term tenant here. My girlfriend also moved in. And so I do actually have a vacant room, which is probably like a guest room, just because there's only 1.5 bathrooms in the house, and I'm not about to have another tenant move in here, especially after my last experience when I had to evict one. So I'm I'm good on that, especially in the house. Now, could I have another tenant and have this thing rented out, have that guest room rented out for $800 a month? Absolutely. Could I finish my basement for about $50,000 and then have that rented out for $1,000 a month? Absolutely. So what I'm basically saying is that for $50,000, I can actually get $1,800 in income every single month being generated from this one house, not including what's already generating from this house and already offsetting the mortgage payment for me in this house. I can get an additional $1,800 right now. Right now, I can get an additional $1,800. Y'all do the math. That's about another $20,000 a year right now. Right? That's what money does. Money breeds more success. Now, is the full $20,000 coming from the basement remodel? No, it's not. Again, I have a vacant room that I'm not even utilizing right now. So even if I just utilize the vacant room, that's about another $9,600 in income a year generated just by doing that. And why don't I do it? Again, it's just for peace of mind. I don't have to, right? And so a lot of people would call it a waste. And if I sat down with a bunch of savvy businessmen, I would actually like if they encouraged me to rent it out, because all I got to do is put it on Facebook and boom, that's $9,600 a year already in my pocket, and that I can invest into YouTube if I so choose. But I'm, again, not doing it. It's called laziness. And so I would hope that we all get to a point in our lives to where we can be lazy, to where we can do nothing when we have potential money just sitting on the table. A lot of y'all have empty rooms in your house. A lot of y'all can house hack. A lot of y'all can do other things to offset your income and expenses, right? And so that's just one of those things. But again, I also didn't do the basement just yet because I don't really plan on renting it out. I would have put an additional bathroom down in the basement, by the way. That's why it would cost $50,000, because the bathroom itself being installed is $25,000, people. It's actually not really $50,000 altogether, because the bathroom itself is $25,000, which I could probably get down to $20,000. And then I believe I was quoted $16,000 to finish the whole basement. So 20 plus 16 is about $36,000. I could get the whole basement finished. Will I do that? You all know the answer to that. And that doesn't actually include the egress windows. So I actually forgot. The egress window is about $6,500. So that would actually make it about $42,500 to finish the whole basement. Those are accurate numbers right now today. If I was to do my basement, about $42,500. And if I didn't negotiate on the bathroom, it would be about $47,500. So real close to about $50,000. I'm not exaggerating numbers, anything like that. So when I said $50,000, it was really, really close to that. About $2,500 off from $50,000. So if anybody's thinking about doing a basement remodel, definitely look at your contractors. Definitely look at what you can get. If you're not looking to install a bathroom, it'll be a lot cheaper. But yeah, that's it for this video. For $50,000, I can obviously purchase a whole nother property. Will I be making $1,000 a month cash free with the same mortgage? Probably not. But you know, I can definitely have a lot more equity being generated over time and more appreciation coming from something else versus putting it in the one house. So I mean, again, there's arguments that can be made for both situations. It really just depends on the individual and depends on your outlook. Right now, my outlook is buying a whole nother property instead of doing the basement. So if you like this video, make sure you leave a like, comment, and subscribe to the channel. You know I post every single day at 8 a.m. daily on YouTube and on Rumble, and I can't wait to see you on the next one. Peace.